Hello, how are you today? Pivots are the turning points of the market and we all know that. And having a deep understanding of pivots and categorizing them is a crucial part of trading. But unfortunately, literally nobody have talked about them and categorized them practically except me and this channel. In this video, we talk about the definition of a pivot and learn the first categorizations of pivots named minor pivot. It's originated from me, so watch the video until the end. You are here with your trading companion Mehran. A simple question: what is a pivot? How to identify it mechanically and how to categorize them to use them in our strategies. We have several kinds of definitions of pivots, but none of them are practical. So let's categorize them first, and at the end of this free course you are going to see the market from a very different point of view. This course is named New Smart Money Concepts. So we are going to cover all my understandings of available smart money concepts and newer ones which are originated from myself. So subscribe, like and hit that bell button. In this episode, we are going to cover definition of pivots and learn the first type of pivot, which is minor pivot, and its importances and practices. So what is a pivot? First, we should know what is a swing. A swing is an obvious continuous down or up move. So when the market is moving up and it's obvious it's a swing, and a pivot is a turning point that an up or down swing reverses, and for example a down swing becomes an upswing. So a pivot is a turning point of the market. For example, we have a downswing here and it became an upswing from this point. So here we have our pivot. Which is the turning point of the market. We have minor and major pivots, and they have their own characteristics and uses. This video is about minor pivots. We talked about swing point highs or SPHs and swing point lows or SPLs in the first video of this playlist, so make sure to watch that video first. Let's first talk about swing points briefly. A swing point is a three candle formation that the high of the middle candle is higher than the high of the right candle and the left candle. You can see that we have a swing point high or SPH here. Why? Because it's high or the point of the shadow is higher than the left candle or the right candle. And for swing point lows, it's a three candle formation, for example here, that the low of the middle candle is lower than the left candle and the right candle. We count the shadows as the highest or lowest point of the candle, not the opening and close of the candle. So when the shadow is lower or higher than two candles beside it, it's a swing point. For swing point lows, we use SPLs, and for swing point highs, we use SPH. A minor pivot is when a SPH gets broken first, and after that, its neckline or the latest SPL or swing point low that made the last high or swing point high gets broken to downside. It's very simple. Don't confuse yourself. For example, here we have our swing point high here, and we have another swing point high here, and we have our swing point low which broke the last swing point high and made the highest high or higher swing point high here. When the swing point low gets broken, we have our minor pivot. Sometimes the swing point high of the right side, it happens before the break of a neckline. Sometimes it happens after the break of the neckline. It doesn't matter. But we have one swing point high at the right side as well as the left side, but it is not very important for us. The most important thing is that the last swing point low that made the highest swing point high, which is here, should get broken with this swing point high or this swing point high, and it should make a higher swing point high. I mean, this swing point low should break the last swing point high and make another swing point high. When it gets broken, we have our minor pivot here. Another important thing is that if you want to make strategies based on this concept, you should keep in mind that it is better to drop an imbalance in the way down. I mean, when it's going down to break this neckline, or after the break of this neckline, it should have a valid imbalance. I'm going to cover what is an imbalance. An imbalance is the space between the shadow of the first candle and the shadow of the third candle in a three candle formation. For example, we have an imbalance from here to here, but I'm not going to talk about imbalances here. I'm going to cover that in the channel. But if you want to make strategies based on minor pivots, you should pay attention to imbalances. Minor pivots high. Minor pivot high, or MPH, is the minor pivot that happens in highs. For example, we have a SPH here and we have our neckline here. When the last SPH or swing point high comes and breaks this swing point low, we have our minor pivot high. And for minor pivot lows, it's when this happens in the lows. How? When we have our swing point high, which makes the last swing point low, and it gets broken with this swing point low, which is the lowest part of this minor pivot. It is going to be minor pivot low, or MPL. It can break this swing point high or this swing point high, that doesn't matter. But if you want to have higher probability, you have pay attention to this imbalance here that I'm going to talk about these concepts. But anyway, here we have validation that our minor pivot low is completed. Let's see some minor pivots in charts. I'm going to talk about uses and importances of minor pivots in this video and later in the channel. But now we just want to learn how to identify minor pivots. And what are minor pivots? You can see that here we have our last swing point high here or here or here, which made the last swing point low. It is important you should mark the swing point high which breaks the latest swing point low and make the last swing point low. It should be lower than this prior swing point low. And the swing point high which made the last swing point low, or the lowest part of the market, or the lowest price, it is going to be our neckline. And when this neckline breaks to the upward, for example here with this shadow or here with this candle, we can say that this is our minor pivot. So we have this schematic as our minor pivot low. And when this happens in highs, we have our minor pivot highs. I mean, we have a swing point low here and here. I'm going to mark them with boxes so you can see them with comfort. And we can see that this swing point low or this swing point low made the last swing point high. And when the market comes back and breaks these swing point lows, we have our minor pivot completed. You can see that it breaks both of these swing point lows. That is our neckline. So it is the schematic of a minor pivot high. Why we should learn a concept named minor pivot and learn how to identify and mark them on our charts. The first important thing that you should pay attention to is the categorization itself. Successful traders are obsessed with categorization. They categorize charts, time frames, candles, bars, patterns, lines, everything. But why? Because you have to be disciplined and mechanical in trading. And only categorizing things make that possible. Simplest fact is that you can't make strategies without categorizations. So we define and categorize pivots to use them in future videos for trading strategies. Second is confirmation entry using minor pivots. Let's talk about this on charts. These are kinds of markups that I'm going to provide you with in Telegram channels. So join that link in the description. I'm going to upload the latest videos, PDFs on that channel. So make sure to subscribe to that channel. I don't go back to charts, for example, and mark some bullshits there and post some bullshit trades in replay mode and, for example, put a box here in Camtasia so you don't see the replay button. So for example, if I come back and replay my trading view, you can see that it shows this replay button here. These are the zones, the actual zones I marked on my charts before these touches happens. Anyway, we don't care about these right now because I'm not trying to sell you courses. I'm just talking about minor pivots here. But you can see that, for example, we have a valid zone here. We have our points of liquidities here, and even here in lower time frame, it is a point of liquidity as well. I'm going to talk about liquidities in this channel, and I've made 2 videos as well. So you can see that, for example, in 1 hour or 4 hour time frame, we have our point of interest in this zone, and in the lower time frame you can see that it came down and made its minor pivot here. So it is the fastest way for confirmation entries. Do we, for example, enter here? No, this is not going to provide us with high reward to risk ratios that the smart money concepts are popular for. It just shows us that the market order flow reverses in lower time frame and it is ready to go upward. We are going to enter, for example, here in this order block, and it is going to work very well. Anyway, what is it? It is a swing point high here. It is a swing point low here. This swing point high broke the latest swing point low here. It came back and broke the latest swing high here. We have our imbalance and order block here, and we have our imbalance and order block here as well, which has its liquidity, for example, here, and its liquidity, for example, here. Let me clean these markups. So we have our minor pivot here. What to do now? We marked our POIs and zones in higher time frames, for example, 1 hour or 4 hour time frame. We came to 15-minute time frames, so we can use the fractal concepts of smart money trading, and we have our setups here. Which setup? The setup that I talked about in that smart money video, that ultimate smart money trading video, and I talked about in the liquidity inducement video as well. But anyway, it's a strong setup, and we can see that here we have our imbalance order block, we have liquidity here, and we enter under this liquidity, and we can see that what happens after that. So minor pivots are the first signs of the market order flow reversal in the lower time frame that we can use. Anyway, let's talk about other importances of minor pivots. The third importance of a minor pivot is that it helps us with finding order flow direction, especially right after entering a trade. What I mean by that, to summarize it up, if you get used to always trade after a minor pivot, you are going to increase your results so much. I mean, swing points show us the current order flow of the market, but more importantly, the last minor pivot is the allowance to buy or sell. Let's see it on charts. I said that if you pay attention to minor pivots when you want to trade and use them and use minor pivots as your allowance to buy or sell, you are going to increase your results very much. Let's see that in action. For example, here we have a minor pivot. You can see that this candle is the last swing low. Why I mark this candle as my latest swing point low? Because first this candle has its swing point high. You can see that its high is higher than these two candles. But why I mark this candle, not this candle, is that the space or the distance between this candle and this order block that may reject the price is substantial. So if we, for example, sell here, we can have a good result. Anyway, you can see that the minor pivot formed here and we can sell the market to the downside and we made a good swing to the downside. For example, here we have our last order block. Order block is the last up move before the down move. And if I want to be a little greedy, this shadow is our last order block, and we can see that it worked to the downside. The last order block here to the downside. The last order block here, even here, it failed to the upside. And then the next minor pivot is here. And you can see that here you can sell the market again. You can see that it is a very substantial move. The next minor pivot is here. And you can see that the market gave our trades. For example, here in this shadow, this line shadow is an order block and it has a substantial move. Why these are substantial moves? Because, for example, here we can go to lower time frame and trade that in 1 minute or 5 minutes or 15 minutes, and that is going to provide us with a very high reward to risk ratio. Anyway, the minor pivot braked to the upside and the market traded to the upside in a substantial movement, and then we have our minor pivot here again, and you can see that the market reversed to the downside and boom. The next minor pivot is going to be, it is not a minor pivot because it just went down. We don't have a swing point high here to get broken, so we don't have a minor pivot here. We don't have a minor pivot, we don't have a minor pivot, and our next minor pivot is here. Our next minor pivot low. How we can identify that? We have a swing point low here, we have a swing point high here. This swing point high broke this swing point low, and it is the lowest part of the market, and it went up and broke the latest swing point high. So here we have our minor pivot low, or MPL. The market traded upward, and here is our next minor pivot. Why? The market went up and it broke downside, and it's the schematic that we talked about. So we have even an order block which works right here. Then again the market started to trade upward and made a minor pivot here or here, and again a minor pivot here, and again a minor pivot here, and again a minor pivot here. You can see that the market movements always start with a minor pivot formation, and that is so important for us. You may say that no, it is not a substantial move. Even with just using order blocks, for example, this order block or this order block, you are going to have a reward to risk ratio of 2 or 3. But we don't trade like that. We are going to go to the lower time frame, for example, in this zone, in here, and we start to use fractals and setups like that ultimate smart money concept video that you are going to see in this channel. And you can trade this setup with, for example, 7-8 reward to risk ratio in lower time frames. So it is a very substantial movement for our strategies that you are going to learn in this channel. Yes, even other smart money traders may say that no, it is not a substantial move, but they don't know how to trade these moves in lower time frames. We are going to work on that. For that, you can see the ultimate smart money trading video. The last and fourth importances of a minor pivot is going to be identification of starts and endings of pullbacks. All of the time pullbacks start and end with minor pivots. Let's talk about them on charts. First, what is a pullback? A pullback is when the market moves impulsively to one direction. For example, this direction is an impulsive move, or it's our impulse leg or our rally leg, and it starts to pull back in a retracemental movement. So it is our pullback. It impulses, it pullbacks, it impulses, it pullbacks, it impulses, it pullbacks. So it is the way that market moves. An impulse is followed by a pullback. Why the market does it? Because the market is going to need fuel after a substantial movement like this, and how it creates and uses that fuel. It creates that fuel in the way to the downside with creating more liquidity. What is the liquidity? You can see the ultimate liquidity video in the channel, and here we have liquidity, here we have liquidity, here we have liquidity, here we have a lot of liquidity. So the market, or here, the market creates and grabs these kinds of liquidity as its fuel, and even in the way up, it creates more liquidity to fuel the move when it starts to break down. So it creates a lot of liquidity here, here, and here in the way down. And with pullbacks, it grabs those liquidities. It injects those liquidities in the market and create more pools of liquidity like here and here and here. And after the pullback ends, it grabs those liquidities as well and starts to break down. Because the liquidity is the fuel of the market. I don't want to confuse you with these concepts. You can see the liquidity video, the ultimate liquidity video in the channel. But anyway, liquidity, structure, order blocks, they are basics of market movements, but we are going to cover them in details. They have a lot of details. They have a lot of knowledge that I should teach you that knowledge in this channel. It takes time, but after that time, you can see these kinds of liquidities and use them in your strategies. Anyway, let's not confuse ourselves. Here we have an impulsive move, and here our minor pivot formed. Why I don't mark this point as our minor pivot? Because you should pay attention to the scale of this movement. It is the start of this leg downward, and it is the point that we are going to use as our neckline, because this movement is a big movement. It's not, for example, this leg. Yes, if you want to trade this leg, you can see that it is our minor pivot, but we want to trade the pullback of this leg, so it is our point of pullback. And this swing point high, which broke this swing point low, gets broken. So our minor pivot is created, and you can see that the pivot started to the upward. We have some fake minor pivot here. Let me show you here. But it is fake minor pivot. Why it is fake? Because we have a lot of liquidity here. You can see that liquidity video for these kinds of concepts. Anyway, and it comes and grabs those liquidities, and here the market broke to the downside. Let me not blabber about these kinds of moves. We are going to have a lot of stop losses. Maybe this is one of them. I don't want to scam up some pictures of my trades with 20 reward to risk ratio or 30 reward to risk ratio to use them as a bait so you buy my course. We are going to have a lot of stop losses. You should be a great loser in these markets to be a great profitable trader. But our losing trades is much smaller than our winning trade. And here, maybe we lose, for example, 1% of our balance. But in these movements, we are going to get rich. Anyway, our minor pivot formed here. Why? Because we have a swing point high and a swing point low. This swing point low broke this swing point high and this swing point high and made the last swing point high. And when this swing point low gets broken, we have the ending of this pullback. So the start of this pullback starts with a minor pivot, and the finish of this pullback starts with a minor pivot again. This is its schematic, and you can see that here it grabbed liquidity. Another detail, it broke down and it made our minor pivot, and you can see that it came down, down, down. And when this movement made minor pivot, is it a minor pivot? No, because it is a very big move. So we should pay attention to a scale, and this is the start of this downward movement. So this is the point that if gets broken, we are going to say that so it is a minor pivot and we can trade upward. But we don't have a minor pivot until here or even here. All these structures got broken, and now we can start to trade to the upward. Where we can start, when we can trade, we can, for example, mark this order block and this order block. It's a continuous order block, this downward movement, because an order block is the last downward movement before the up move. So it is a continuous order block, another detail. And you can see that we can trade it to the upside. It's a very choppy condition that we don't trade with smart money concepts. We trade these with liquidity inducement concepts that I'm going to talk about some details about liquidity inducement in this channel. Anyway, you can see that liquidity inducement video, but in these choppy conditions we don't use smart money concepts very much. I mean, in this time frame, maybe the lower time frames are much easier to trade. Anyway, why it is very choppy? Because it's the end of year 2021. You can see that it is very choppy until January, and the middle of January we have our minor pivot to the downside. You can use here or here as your point of minor pivot, or here, and you can see that it starts to the downside with a very big substantial move. It is our minor pivot again, and you can see that it starts to the upside. It is our minor pivot and it starts to the downside. Let's see these on a bigger picture. We talked about impulses and pullbacks. Here we have our impulse. It starts with a minor pivot that we talked about. Here is our pullback. It ends with this minor pivot we talked about. It came down and it's the next impulsive move. You can see that the pullback starts with a minor pivot. It's a choppy movement. We don't care about these choppy movements. And when we see a good leg out of this choppy movement, we can say that we have valid structures to use as a point of interest for marking our minor pivot. And you can see that it broke those necklines. So the next impulsive move started with a minor pivot. And here we have our minor pivot neckline as well. So the pullback started with a minor pivot. Here we have a minor pivot as well. So the next impulse started with a minor pivot. It is just one very basic, simple concept. We are going to use Fibonacci's, we are going to use liquidity concepts, we are going to use structural concepts, we are going to use imbalance concept, we are going to use a lot of other concepts and details to see when is the exact time that we can trade these kinds of movements. Can we trade just with minor pivots? Yes. You can make strategies based on minor pivots plus some other things you know already. But is this the smart money? No, smart money has a lot of concepts that we are going to provide to you for free in this channel. So have the channel, subscribe and hit that bell button. You can see the strength of our content. So your support is much appreciated, and in return you are going to learn a lot of things. I'm in Iran. We don't have a good internet connection here. I can't trade all the times. I'm using strong VPNs to connect to YouTube or Instagram or Telegram. So your support is much appreciated. It helps me to survive in these dark days. And in return, I'm going to make a very strong trader from you. So in this video we learn about minor pivots, and in next videos we are going to talk about major pivots, order flows, entries and all different things. Thank you for watching the video. If you have any criticism, any question or any other comments, write that below. Goodbye, and remember, I'm here as your trading companion. Goodbye.